It's true that people might be wondering what goes on behind the scenes. What happens when you click any button? When you click, let's say, the buy button or the sell button, and it's simple. What tends to happen is whenever you click that buy button or the sell button or the blue button or the blue or the red button or any button at all, the brokerage firm, which is where you funded your accounts, they are the brokers. They take your money to the live market, and we have thousands of brokers that the program, both the regulated and the non-regulated. We have a lot of brokers. We have IC Markets, we have Xness, we have Infinix Capital, we have Ava Trades, we have Ion FX. We have thousands of brokers. It depends on the one you want to use, what suits you, if you see their spreads and all that. And what tends to happen is whenever you open a trade, they take your order into the live market and they place it there for you, and the market starts to read instantly. It is just something that happens within a few seconds. It is as fast as possible because algorithms and AI are at work there. Now, people might be asking, how do you know that you come out profitable in this trade? Let's say you buy, how do you know that you're going to make profits? This is where the fundamental trading comes in, because now you already know the fundamentals of the trading before you just open. It's not about you just mapping out charts, analyzing with your technicals. No, when you know your fundamentals and have your fundamentals correctly in shape, you know that okay, since you open this position, it's going to run from here to here at this price, from this price to this price. I'll use oil for an instance. If you're trading oil and you know that because of the war that is going on between Israel and Iraq, Israel and Iran, you know that what tends to happen is oil will react. Why? Because a particular nation has the Strait of Hormuz in their control, which is Iran. And that Strait of Hormuz is just like a passageway where oil vessels pass through. It's just like a normal road. When I know that whenever there is a war, countries tend to close their borders. Once they know that this is going to benefit you, they go there and close it. So once they close that Strait of Hormuz, the price of oil will shoot up. Why? Because there's still demands of oil. Millions of people want oil. Thousands of people want oil. Hundreds of nations, hundreds and numbers of them. A good number of African countries, European countries, they still need oil for their own sustainability. Hence, once that strait is blocked, once their militia or whatever goes to block that strait, making it impossible for vessels that carrying this oil, both refined and unrefined, to pass, those that has those oil with them already will automatically raise the price. It's as simple as that. That's the law of supply and demand. Once there is equal supply and equal demand, the price tends to remain the same. But once the supply reduces and the demand is high, this is why you see something you bought yesterday for 1,000, you're now buying it 3,000 naira. It's because of you still have large numbers of demand but few supply. I'll give you an instance. If you're selling an iPhone today, let's say you're selling an iPhone in the market and you're not the only one selling it, and you're selling another iPhone, let's say you bought the iPhone for 100,000 naira and you're selling it for 150,000 naira, because you're not the only one. Everybody's selling at that price, and everybody in that community or in that location wants an iPhone. They keep buying and you guys keep restocking and they keep buying. If it gets to a time whereby you're the only one selling it, everybody stops selling it, and you're the only one monopolizing that market, you'll be forced to increase the price, because you know that since the supply is few and the demands are still high, what tends to happen is you immediately shoot up the price, and if you're greedy enough, you might be selling it 10x what you bought it. So this is the same thing that happens when you analyze the market. Let's say you're buying and selling Euro USD. You know that you're looking at the bank projections and analysis from banks concerning Euro, what's happening in Europe, what's happening in US, the economic situation, political situation and economic situation. You weigh the both. I know that okay, what's happening in US or what the Feds are saying, the interest rate cuts, the unemployment gains and losses of jobs, it is going to affect the dollar. Is it going to make the dollar to reduce in value? And what is happening in Europe, is it going to make euro to increase in value? Let's say they increase their interest rate or they reduce their interest rate, is it going to increase the valuation of that currency? Now you know that okay, since this what is happening in the US is going to affect the dollar, automatically once the dollar reduces value, if you exchange it to an euro, euro will be more higher than the dollar. So when you come to the forex market, you already know what to do. All you need to do is just to place your buy order, move your stop loss accordingly, and know that okay, if this thing starts to reduce values, it's going to take from this particular point to this point. Same thing in oil. If you are trading oil, US oil or Brent or anyone, and you know that since the Strait of Hormuz is blocked, the price of oil will shoot up. That's why few months ago we have oil trading up almost $110 to $120 per barrel, because the war was going on and the straits were blocked and countries still need oil. So people that has more oil, like countries with oil sufficiency like Nigeria, Saudi Arabia and other countries, they will be selling at a higher price. Now you see the oil, the per barrel going as high as $110, $120 per barrel, when it was before it was selling like at $60 per barrel, $50 per barrel. Do you see the margin? Because of that's temporary block, and one immediately they relaxed it, the price actually went back to $60 per barrel. And again, as of today, the market, the price of oil is still trading at 900 per barrel because of the war is still ongoing. The conflict has not been resolved yet. So this is what happens in the forex market. You're buying and selling, and you need to know that you're not just buying and selling. You need to know why you're buying and selling. And this is one of the reasons why most retail traders are losing money, because they don't know what they're doing. They're just clicking buttons. They analyze, they draw charts, they draw. The market doesn't respect those lines. What makes people think, oh, their technicals is in shape, because of when they draw, let's say, their major support and the major resistance level on a particular price, market react to prices. Just like when you're buying, I will still use oil for instance. Oil traded to $120 per barrel because of a particular thing. That line, that price level is not a resistance. So just like for instance, since it's trading at $90 per barrel, it might likely get to that 100. But what tends to happen when it gets to that 100, it doesn't stay there, because now the countries in this conflict, they'll have to do something to relax the conflict so that oil will pass. Immediately the strides are open, the price will still fall, it will crash down. And once the price crashes down, it is still coming down to a base, a support of $50 per barrel, 40 $50 per barrel, $68 per barrel. This is now the support. Now, what traders do, if you are an intelligent trader, you know that this is where you want to put your support. When you're selling from $180 per barrel, when it gets to $60 per barrel, you want to close your position and take your profit. This is how you trade, because now you already know what is happening. You see, you've brought your fundamentals and your technicals, and they are in shape. Now you bring it together, it turns into a conference for you to trade. This is how you make money. This is how you make progress in your P&L. This is how you make forex trading work for you. It's not about you just drawing lines, just drawing blind charts. You open a chart, you draw nonsense line, you don't even know what is happening. You don't know that, okay, since Euro US is trading at 1.14 price level at the moment, it is likely going to reach at 1.20. But however, whenever you want to retrace it, it will retrace below 1.12. You already know that that price is a significant support level, that when the market gets there, these banks tend to react to be like, oh, this interest rate is high, or it's too low, or inflation. They will have to do something for their currency to still come, just like Naira. Once Naira crashes against the dollar, you see the Central Bank of Nigeria, they start implementing different policies, because if it continues to crash, Naira will lose value automatically. So they don't want that to happen. Hence, when they see the Naira crashing against the dollar, they'll have to implement something for it to at least bounce back. That's why when we saw Naira almost trading to 2,000 Naira per dollar, Central Bank reacted. They did something. They touched interest rate. They did a lot of things, and what tends to happen is you see Naira climbing up to 1,500 per dollar instead of 1,900 getting to 2,000. So this is what's happening in the forex market in a nutshell. If you have any other question, drop it in the comment section. And don't forget to like, comment, and also follow for more. And if you find it difficult to navigate the forex space, if you want to learn this thing I've just said about forex trading, we'll have a perfect course for you. It is called the Trading Edge Program. It has a giveaway price of 30,000 naira. It is very, very cheap. All you need to do to get it, click on the link in bio, send us a DM. We're going to give you access to the course. I will see you on the inside. Cheers.